So I want to share with you guys something that you should find very, very encouraging and bullish and kind of in a weird way proof that we are getting closer to the moass, that these liquidity conditions that we are currently seeing is what is going to force shorts to cover. It comes down to a catalyst. AMC needs to see a catalyst. It's not going to squeeze for no reason, right? That pretty much goes without saying. But the only difference between a margin call and a margin call actually turning into an action, like shorts covering on their short positions, is due to liquidity becoming more expensive. Now, just for a backstory here, if you don't follow the channel and this is your first time here, first off, welcome. But I have been saying this for the last 6 months. We need to see these higher interest rate environments. We need to see less liquidity in the markets to force shorts to cover, because after all, back in June, back in January, why didn't all the shorts cover? Well, it was the simple fact of you could go out and borrow money for 1 or 2%. If you had the means to go out and borrow money, which all of these hedge funds have, and they can collateralize debt a little bit differently than you guys can. If you have a margin portfolio, you can't really put aside separate assets to service your margin call, but nonetheless, they could go out and get a loan for 1 or 2%, enough liquidity to meet a margin call if they were over leveraged in their AMC short positions in the past, ride out the wave, wait for the stock to come down, and then cover at a reasonable price, or just not cover at all. It was so cheap to get money. The Fed was basically encouraging taking on these risky positions, like aka shorting AMC stock. So for an example, when you have bonds that have sold off in the way that bonds have, meaning interest rates are getting jacked up through the roof, a mortgage rate is at its highest level in the past over 10 years now, and you see your stock portfolios going down, that's less collateral potentially to use to put up in case you get a margin call. Well, at the same time, if it's now 3 to 10%, well, really, logically speaking, it's probably in between 5 and 10% to actually go out and get a loan to service a margin call or to stay in those positions. So it's not as feasible to do that, because that's going to really start to hurt a lot more, right? If you could get a loan at 2%, but now it costs you 5%, that's two and a half times more expensive to take that loan out, right? So that's the main key with AMC stock. But what happened the other day, I want to talk about Beyond Meat here. Now, I'm not advocating you guys trade this, come to your own conclusions, do what you guys want to do. I'm showing the simple fact of what happens when low liquidity is in the markets, when interest rates are high, because after all, this is what I've been talking about for the last 6 months, and you actually seen this happen with Beyond Meat. So yesterday, Beyond Meat was trading at about $35 per share. It was a somewhat normal day. I believe the stock was down like 2%. What happened? You had some news come out, which is not even like substantial news. It says, here's why Beyond Meat skyrocketed only to come back down to earth. What happened? Shares of plant-based meat company Beyond Meat were having a ho-hum day. On Wednesday until about 2 p.m., then a report surfaced saying that fast food giant McDonald's had added the McPlant burger to its menu permanently, and Beyond Meat stock skyrocketed. Shares were up almost 34%. Then another report came out saying the first one was misconstrued. Here's what is going on. Now, did you guys catch that? It's not actually a big catalyst. All it literally was coming out and saying McDonald's is now going to permanently keep this item on its menus. It's not a large segment of Beyond Meat's business. It was not a large deal. It's not going to fundamentally change the stock in a significant way. After all, it's already on the menu and it's probably not going away anytime soon, right? People understand that. That's already priced in the markets. But when you get any bullish catalyst, even if it's small, in this market environment with stocks that have a high short interest like Beyond Meat sitting at 43.43%, high cost borrows, high utilization, similar to AMC, that's where you can see rapid shorts covering. And this stock went from 35 to 47.40, got halted on the way up twice, and then halted on the downside once it came out that this article was misconstrued. But what eventually happened by the end of the day, this stock popped back up to about $41, almost $42 per share. So it was still, to close out the day, up like 20%. on the day. And if you look, like I was saying, it's not really a huge catalyst. It says McDonald's is expanding its test of the plant-based McPlant burger created by Beyond Meat. Starting February 14th, the fast food giant will roll out the burger at roughly 600 locations in the San Francisco Bay and Dallas-Fort Worth areas. So this has already been a thing since January 2022. Well, February 14th is when it actually went on the menu. So what am I trying to say here? That when AMC sees a catalyst, when there is something that does come out, keep in mind, we have not really seen a catalyst for AMC in this regime that we have seen as of recently, the bond rates going through the roof, right? Capital becoming more expensive and more scarce. You really have not seen a major catalyst for AMC stock. Even back here, when we had this 45% day, liquidity was getting tighter, but it was not tight. After all, the stock market was rallying in this time frame. Here is the low. This was the low as well for the market's last Fed meeting. That was March 14th, and then we started to rally as well. So right now, you're seeing a lot less liquidity out there. The bond rates have really went through the roof. You're seeing a lot of bad news, bad sentiment, like GDP slowing down and actually reversing courses, looking a lot like a recession is coming. Look at the bond rates at 2.85%. Let's go ahead and wait for this to load. You know, it was a lot different. Even if you look back in March when we did see that rally, the bonds have went up about 1% since then. And this is really what is tied into your actual interest rates. Because think about it like this. Nobody's going to lend out hedge funds or you or I or anybody else money for cheap or for less than, say, 5% if you could go get 3% from the federal government risk-free. It simply doesn't work that way. Especially on a risky asset or anything involved with the stock market right now, you're probably going to charge 7 to 10%. So even since back here in March, it's 45% day, liquidity has went up dramatically. Like a 1% move in bond rates in general is kind of crazy, right? But you could see just the scope of this. So really back here in January, rates were so low, money was so cheap, even back in June, comparatively to now, there's no comparison. Much different. There was too much money out in the system. And now I think we could be looking at something like Beyond Meat once we get a good catalyst that comes out. Now, people have asked, haven't we seen good catalysts? Yes, we have seen good catalysts that I think would have caused the moass if they came out today, right? If they came out when liquidity was low, like the crypto business, I don't know what you guys want to call it, accepting crypto. That was big. Or specifically the popcorn business. I think that personally could have caused the moass. Maybe it's a good earnings report. Maybe it's a buyout, right? Them buying a stake in another company. Any of that is fuel for a potential moass in my personal opinion. So I did want to make this short, sweet, quick video just so you guys can kind of get a feel of what is going on in the marketplace and compare, you know, Beyond Meat to AMC in the sense of a small catalyst rallied the stock 35%. A similar thing is going to happen for AMC. What is the common denominator here? Liquidity is scarce, so shorts are quick to cover, and it's very hard for them to remain in their short positions, especially if something does start to take off. Like if McDonald's had never came out and rebuffed that article, Beyond Meat could be $80, $100 right now. That's the kind of liquidity regime that we are currently in. So that is going to be all for this video, ladies and gentlemen. Thank you guys for tuning in. Hit the like button, subscribe to the channel if this is your first time to the channel. Hopefully you guys did learn something and got some better perspective on where we currently sit with AMC stock. If you guys want to come trade with me live in real time, join a group of about 100 other traders. Link down below in the pinned comment. Feel free to do that. Thank you guys for watching, and I will see you in the next one.